doing business in Africa. You can't afford to be without Africa Investor.
Welcome on behalf of Africa Investor, the African Union Development Agency, our co-hosts, the Continental Business Network, the African Sovereign Wealth and Pension Fund Forum, and partners from the G20's Global Infrastructure Hub to the African Green Infrastructure Investment Bank Partnerships Dialogue on Pioneering Asset Owner Green Pathway Initiatives, which is an official COP26 UNFCCC Africa Climate Week Asset Owners Side Event Consultation. My name is Hubert Danso. I am the chairman of AI, the African Union Continental Business Network, the African Sovereign Wealth and Pension Fund Leaders Forum, and I also lead the African Green Infrastructure Investment Bank's Advisory Board, and I also chair the CFA New York's Global Asset Owners Council, and I will facilitate this consultation. I would first like to thank each of you present for taking the time out of your busy schedules for this event. This African Green Infrastructure Investment Bank Partnerships Dialogue on Pioneering Asset Owner Green Pathway Initiatives has convened the world's leading institutional investment communities, CEOs from across the continent and around the globe during COP26's official Africa Climate Week and during the 76th session of the United Nations General Assembly. And we've been convened here because of our collective recognition about the urgent need to forge and implement innovative institutional investor-public partnerships, particularly between African heads of state, ministers of finance, central banks, and the institutional investment community to meet the goals of the Paris Agreement and the Sustainable Development Goals, Agenda 2063, and the African Continental Free Trade Area. Today's consultation, in accordance with the theme, will be on the role of asset owner partnerships in support of Africa's green transition and the opportunity and the leadership role both domestic and global asset owner communities can play to make COP26, which will be hosted in Africa, an asset owner-led and successful COP summit. In essence, our mission is to design, co-create and deliver greater public and private pathways for finance mandates to get more alignment and more catalytic private investment pathways that fast track and scale private capital's participation in the green transition, implemented through institutional investor public partnerships, which we will hear a great deal about throughout the course of this discussion. This event is broken down into a briefing segment, which will have two high-level update briefings, one on the African Green Infrastructure Investment Bank Initiative, and the other on the CFA Asset Owners Institutional Investor Public Partnership Model Law Initiative. That will be followed by two consultative panels, the first being on African asset owners addressing the green financing gap, asset owners co-developing and co-investing in infrastructure, and the second on international asset owners' perspectives on the road to COP27 asset owner leadership and initiatives. To accomplish these goals, I'm delighted again to be joined again, as I say, by the world's, and I make no small mention of this, by the world's foremost institutional investment leaders and advisors, committed to finding alignment and arresting the huge economic and climate damage to our African economies caused by COVID-19 pandemic. And we're all here really to see how we can chart a prosperous and resilient pathway for investment partnerships with the continent and in support of the African Union's 5% agenda, where African pension funds and sovereign wealth funds have committed to increase allocations to investable regional and domestic infrastructure opportunities through the Institutional Investor Public Partnership Framework. To get us going, I'm going to commence the African Green Infrastructure Investment Bank briefing, along with Eloy Lindigier, who is the former Chief Investment Management for PGGM. And AFGIB Advisory Board members will also be weighing in where necessary on these same issues during the panel. But before handing over to Alison Fagan, who is the partner and international head of infrastructure funds at DLA Piper, who will close out the briefing segment, who will give us a briefing on the CFA Asset Owners Institutional Investor Public Partnership Model Law Initiative. So I'm now going to share my screen, and hopefully you will see the presentation materials for a very brief update on the status of the African Green Infrastructure Investment Bank. I think many of you will recall this was an initiative that we announced during this year's African Ministers of Finance meeting that was hosted by the United Nations Economic Commission for Africa. And during that particular presentation, we announced and presented the African Green Infrastructure Investment Bank initiative. And we undertook to ministers that we would convene at an advisory board and present that during the this year's G7 summit, which we did on the eve of the G7 summit, where we brought together a very high-powered advisory board. A number of you are participating in this particular event today. The advisory board function and role was to help us, and we've been working bilaterally with a number of advisory board members on thinking about the next key step, which is to detail and articulate what our implementation plan should be and what the sort of strategy should be for the structure. So I'm just going to give you just a little bit of background on where we are as far as that is concerned. But I think here you can just get a picture of, the need for the African Green Infrastructure Investment Bank. And you can just see, we have $100 billion per annum infrastructure, particularly energy infrastructure deficit. We require about 150 billion to 350 billion for adaptation finance between now and 2030. And the big investment kicker is that we need $3 trillion of investment to meet our nationally determined contributions. Now, I think that's basically against the background where we know that we have the opportunity to leverage our renewable energy endowment, which is very rich. 10 terawatts of solar, 350 gigawatts of hydro, 15 gigawatts of geothermal. And astonishingly, Africa possesses 180,000 terawatt hours per year of capacity, which is enough to satisfy the entire continent's electricity demand 250 times over. How do we see this? We see this as materializing into an opportunity to address something very specific, which is, in spite of such a huge infrastructure deficit, in spite of all of that renewable energy endowment, the green finance market on the continent is still very highly fragmented and hasn't proven to be able to mobilize private capital at scale, at least to a level that is capable of meeting the net zero goals and addressing energy poverty. We on the continent still do not have a single purely green financial institution to address this particular challenge. And as many of you will know, we've very successfully recently launched the $3.2 trillion African Continental Free Trade Area. And a key part of the bank's focus is also going to be on working with the companies, both small and medium-sized companies and large companies, to assist green their supply chains and provide innovative products for them. In this slide, it just gives you a very clear picture. You can just see on the left, increasing scale, at the bottom axis, increasing green specialism. Having scale to mobilize capital is one thing, but we take and attach great import to the ability to be able to have some very dedicated and specialized expertise to take advantage of this particular opportunity to build capacity, not only within us as asset managers and asset owners to be able to address the green finance and transition agenda, but also to help our governments do precisely that. The African Green Infrastructure Investment Bank is an African Union convened and supported African institutional investor-led green finance initiative and a global finance initiative. And our focus really is to catalyze private capital for Africa's green transition in the run-up to COP27 that will be held in Africa and beyond. And we just sort of set out some very, quick and high-level goals. First, is to establish the new entity that has a purely green focus. Second is to make it independent and profit-oriented, but to ensure that it has flexible capital. Third is to hire a commercial team. And then the fourth is to ensure that we set up an independent governance structure. We looked at 3 different particular scenarios with our advisors in terms of the market interventions. One, as you can see on the left, is looking more at the minimal intervention, and the other is looking at a much more, active intervention. So, we ultimately vacillated between these particular scenarios and ended up with the ecosystem enabler model, where it's based primarily on the UK Green Infrastructure Investment Bank, where we've elected to be a cornerstone for this new and exciting economy. I almost, as we discussed earlier, I almost call us, we're of the Carney mindset. We're of the Mark Carney, the former central banker from the British government, who's now a major climate advisor globally. And he basically said that climate change is the biggest investment opportunity of our time. And we also believe that as the institutional investment community on the continent, and that's the model that we are going to be approaching. This is just a strategic intent illustrative example of what an ecosystem enabler would look like, both being able to operate in the equity as well as the debt space. And this is essentially just giving you, a high-level perspective on the different vehicles, the different interventions, the different pools, that the fact that we'll be creating a number of SPVs in the structure. And Lionel and Eloy, who will be joining me on this presentation, will begin to talk to some of these areas where he's had experience as well. In terms of the focus sectors, these are the sort of 6 key areas: wind, solar, no great surprises here. Everything needs to be done, and everything needs to be done quickly, as we all know. Waste recycling and biomass, energy production, agriculture and forestry, energy efficiency, grid electrification of cooking and transport. Just in terms of the product range, we are focused on establishing a flexible business model that allows us to maximize our impact across a strategic range of impactful and climate agreement and Paris Agreement aligned and missions and commercial activities. And we will be very open to continuing to innovate as the market innovates products, but from a sort of stricter and structure approach, we will have a suite of risk mitigation type offerings, as it were, first loss debt in each of the construction and operating phases of projects, as an example. We're going to also be offering innovative finance mechanisms, upfront refinancing commitments, which guarantees an exit for long-term finance after construction upon certain conditions being met naturally. And then capital provision, in addition to equity and senior debt on market terms. We are likely to be able to continue, as I mentioned before, to offer a range of products, including innovative finance mechanisms to increase capital provision for cross-border energy efficiency and the like. This just sort of paints the picture around our revenue model. The African Green Infrastructure Investment Bank has been established as a for-profit entity, working to build an enduring institution. To this end, AFGIB will essentially ensure that each of our projects and our portfolio as a whole will enable the African Green Infrastructure Investment Bank to basically to earn risk-appropriate returns. And we intend to close all of our transactions on fully commercial terms in line with our co-investors. As I mentioned, we established a very successful, very successfully established at the launch on the sidelines of the recent G7 meeting, a very high-powered advisory board. I'm sure many of you see yourselves here. This is just to give you a picture of that. And one of the key roles that we'll also be playing, similar to what we're doing today, is to be providing insights and advice and guidance as the global and African asset owner community to the teams that will be working on developing COP27's agenda, which we are orienting, and there's a great reception within colleagues at the African Union to ensure that whilst COP26 has been heavily finance-led, that COP27 has a very strong institutional investor leadership dynamic and component. So this just sort of gives you a bit of a picture about some key advocacy platforms and advocacy and roadshow areas that we will be pursuing. But ultimately, we're going to be providing institutional investor leadership and advocacy to assist governments design and deliver greater finance mandate alignments, and again, as I mentioned in the beginning, to provide more catalytic investment pathways. Finally, just in terms of our defining character, the African Green Infrastructure Investment Bank is a unique institutional investor public partnership illustration and model, and the first of its kind of this scale and with this focus on the continent. It will act commercially, and we will invest profitably for market returns in construction and operational phases. We are here to solve market failures, attracting top talent and broad stakeholder support on a national as well as an international level. And we'll be evergreen in nature, attracting long-term investors looking for green impact and very long-term and very stable returns. So that concludes my initial component of the African Green Infrastructure Investment Bank briefing. In terms of capital recruitment, we'll be looking to raise around $3 to $5 billion US from African institutional investors and African governments, and about $20 billion from G7 and G20 institutional investors that we're engaged with, that are helping us shape this so that it's more aligned with their investment strategies and statements. We do not want to come with a finished product. We really want this to be a collaborative effort because it's unique in nature, and we think that we all have to, share expertise and models and best practice so that we can ensure that we can deliver, so that ultimately the African Green Infrastructure Investment Bank becomes that stable piece of asset owners' portfolios. With that said, now let me pass the floor to Eloy, who will just share some perspectives before we go into our second briefing led by Alison Fagan. Over to you, Eloy.
Thank you, Hubert, for this invitation to make some remarks from the perspective of a long-term investor based in Europe. I think this is a hugely valuable initiative because the long-term investors outside of Africa actually see the enormous opportunity to invest in the energy transition in Africa. And it's probably one of the most promising opportunities that you have already described in your presentation worldwide. The difficulty, of course, is how to access that opportunity with a risk return profile which is attractive. And for that, you need reliable local partners, you need stakeholders that are aligned in the markets that you operate, and you need partnership with local governments because you're really investing into the vital infrastructure of the future. Now, I think this initiative, in a sense, is unique, that it can provide the conditions to actually crowd in that capital from outside of Africa, together with like-minded peers in Africa. I think that's really a unique strength of this initiative, that it's bringing together long-term investors locally and abroad, and it's doing this with very strong support from local stakeholders and local governments. And in the sense, I'm very happy that the structure of ASWPFF is being modeled on what had been done in the UK. The UK government, with launching the Green Investment Bank, recognized that there was some kind of a market failure in kickstarting the investments in the green economy, and was hugely successful by mobilizing that long-term capital by investing, by being the seed investor into this institution, and thus giving confidence to the market that there would be the level of alignment in place to actually make things happen with a team which is commercially savvy and experienced at arm's length of the government. And this led long-term investors in Europe, such as PGGM, to invest alongside the UK government into new areas of the economy, such as offshore wind. And it allowed long-term investors to also, that may not have had the direct investment capability beforehand, to actually use that experience to also build their own expertise in the field and become direct investors. So actually you are also very much a cornerstone, as you described, of an ecosystem building capacity, supporting innovation by putting something in place which is not there before. And in that sense, I think the parallels between ASWPFF and what the Green Investment Bank has done in many of the fields, and you've described a number of them already, are quite large. So I very much like emulating that model. And Hubert, I know we have 3 minutes, so I'll leave my opening remarks here.
Thank you very much, Eloy. And since we're talking about innovative approaches, let me quickly, as you say, in the interest of time, move on to the briefing on the CFA Asset Owners Institutional Investor Public Partnership Model Law Initiative. This will be led by Alison Fagan, who I mentioned is the partner and international head of infrastructure funds at DLA Piper in London. The floor is yours, Alison.
Hi, thank you, Hubert, and thanks for asking me to address the conference today. It's a really exciting time for us to engage in the infrastructure space with COP26 and ultimately, as you mentioned, 27 on the horizon. And there's such a strong focus on sustainable infrastructure development policy and implementation that I feel personally, and we at DLA feel, it's a time when we can make real impact and deliver substantial benefit in what is a relatively short space of time. So we're excited to be engaged with you on this initiative. As Hubert mentioned, I'm the head of international infrastructure funds at DLA Piper and a contentious projects partner with experience dealing with PPP projects at all stages of the infrastructure investment life cycle. So I've been asked to just spend a few moments outlining a framework initiative that we at DLA are working on with the Asset Owners Advisory Council. I should say at the beginning, we're in the very early stages of developing this newly designed partnership framework, but we're confident that it will provide a direct link between global institutional investors and governments who require bankable green transition and net zero infra projects. It's an IIPP structure in essence, and that concept won't change. But we are just starting to build those blocks of development to deliver something truly exciting. It's quite clear to us that the social and economic importance of investment and responsible ownership of infrastructure simply cannot be understated. It's widely recognised that securing growth in productivity and incomes and improvements in health and education relies heavily on high quality infrastructure. And all that net zero and sustainable development mandates have done is add to that matrix. But let's be honest, infrastructure investments are complex and require innovation to enable successful outcomes. They also need commitment from informed investors and owners to act as good custodians of critical assets on a long-term sustainable basis, exactly as you flagged, Hubert. The purpose of this initiative, therefore, is to get ahead of the opportunity that exists, channel our experience and expertise and your experience and expertise working across the spectrum of participants investing in infrastructure, and find active routes to mobilise private capital at scale with speed for exciting bankable green transition and net zero infrastructure projects. In the day job, I see increasing jurisdiction diversification, asset class diversification, and investor diversification as trends within the sector. And we as a market must be dynamic to secure direct engagement to deliver these key priority projects. In my view, that can only occur with an implementable, codified, and ratifiable legal framework which will help deliver those. And that's exactly what we propose to develop in consultation with the sector as part of this initiative. For sustainable projects, we want participants to be able to collaborate to determine quickly and efficiently which opportunities can be prioritised, to co-design bankable projects, and to successfully implement through project developments the development of this high-quality infrastructure that we so need. By achieving that aim, we can certainly stimulate and deepen green secondary and capital markets. The domestic and global asset owner community is uniquely placed to play a leadership role here, and we're delighted to be able to leverage our assistance and our experience to assist you all. In terms of timeline, because I know that's a key driver, we propose to develop and present a high-level preamble by November 2021, so just a very short period of time, and a period of stakeholder consultation and drafting will follow, with the hope that we can launch the framework itself at or around COP27 in November 22. So I think I've covered the key points there, Hubert, but if anybody has any thoughts or reflections on the initiative, anything they would like to add, then please don't hesitate to contact me directly or those involved in the Asset Owners Advisory Council, or I'm sure Hubert will field many questions.
Thank you, Alison, for that particular insight. You know, as we look at the marketplace that we function and operate in, and we see the level of investment and attention and detail and resources to help the private sector participate through PPP regulations, it is quite astonishing that as we try to mobilize multi-trillion dollars or 100 trillion plus pool of capital, there isn't a legal instrument that can accelerate or create a pathway directly between governments and institutional investors. And that's what this particular instrument will be. It will be a law that governments can use. It will be a law that asset owners can understand and set some rules of the game, which we think can be used in isolation, independently, or as a complement to a government's ability to procure major programs, particularly those that have climate impacts or are directly linked to their national determined contribution related projects. One of the key elements here is that as the asset owner community, we will be able to actually not continue this asking governments for where are the bankable projects, but we'll actually be able to lean forward, bring some of our expertise and sit down and help co-create the bankable pipeline and very quickly explain to government where we don't think our mandates will permit us to be able to pursue projects that are perhaps more aligned to the interests and the mandates of perhaps more concessional forms of finance and development finance. So thanks very much for that introduction, Alison, and we're all going to be looking forward to the presentation, as it were, and launch of the preamble at an event that we'll be co-hosting with colleagues from the International Energy Agency and the G20 Global Infrastructure Hub, and a number of other key asset owner partners during COP26. That brings our briefing segment to a close. Well, we're now going to move to our first of two consultative panels, being the African Asset Owners Panel on addressing the green financing gap, asset owners co-developing and co-investing in green infrastructure. In this panel, we will consult each of the speakers for their insights on how asset owner co-investments in the 5% agenda and institutional investor public partnerships could leverage the African Green Infrastructure Investment Bank as a strategic tool and platform to mobilize domestic and global pools of capital for Africa's green transition. And we'll also be soliciting, colleagues' views on, the importance of asset owners advocating and advocacy around the promised, former COP promise of $100 billion per annum commitment for developing countries for adaptation and mitigation finance. So speakers in this panel include Ndabi Nkize, who is the Chief Investment Officer at the Ascon Provident Pension Fund, EPPF. We have Ayman Solomon, who is the CEO of the Egyptian Sovereign Wealth Fund. We have Akim Doada, who is the CEO of the Gabonese Sovereign Wealth Fund, FGIS. And we have Ngatia Karingi, who is the CEO of the Kenya Pension Fund Investment Consortium, KEPFIC. And we have Solomon Asamoah, who is the CEO of the Ghana Infrastructure Investment Fund. We will start in Johannesburg as we take our little tour around the continent. So I'm going to start with Ndabe to address the panel's two questions. Over to you, Ndabe.
Good morning, everyone. My name is Ndabe Nkize, Chief Investment Officer of the Ascon Pension Provident Fund. I would like to probably start with just sharing my perspectives on the 5% agenda, the need for pension funds and other institutional investors to invest in infrastructure for the benefit of all stakeholders in this space. I must say that we as pension funds are long-term investors. We are investing for 70 plus years, knowing that we have benefits or promises that we've made to our pensioners for 70 more years to come. So we are long-term investors. We are mandate makers. So unlike asset managers, we actually make the mandate and therefore can shape what needs to go into those mandates. We are, as I mentioned, investors as well. So we don't only make mandates, but we can actually vote with our money by giving those mandates to the investors that are able to abide by those mandates. We take risk management seriously, so we like to partner with various other people. And if I can just imagine, an international investor will not come and invest in Africa if African investors are not investing in Africa. And neither would we take our own money and invest internationally if the international investors are staying away in droves. So all of those issues make it very important for asset owners and institutional investors to come together and collaborate, to be able to agree on issues pertaining to ESG and the taxonomy and the just transition and all these other factors that go hand in hand with ESG. They need to flatten the cost curve, the curve of investing in infrastructure. There are a lot of due diligence costs that one can incur, but if a group is acting in unison, it will be able to reduce those unit costs. There's peer-to-peer learning, making the learning curve not as steep for each and every individual, because you can talk to your own peers. The last thing you want to know is to be taught by an asset manager who wants money from you. They might not necessarily tell you everything if they happen to be thinking about their own interests. But peer-to-peer is a safe space for institutional investors to learn more about the asset class and to actually be able to agree even on fees in the event that they want to use asset managers. So it's a powerful platform that would help us increase the percentage of assets that are invested in infrastructure assets. In the past, the percentage has been even lower than 5%, especially if you take into account that the allocation to private markets tend to include private equity, venture capital, as well as infrastructure. So what is dedicated to infrastructure tends to be small. And we believe that actually needs to grow. In South Africa, we need to increase our percentage of fixed capital, both public and private, that is going into the economy in order to drive job creating growth. And therefore, this is not the time for people to be doing the tried and tested, the traditional asset classes of public equities and bonds. It's time for us to look into infrastructure assets that are a backbone of any functioning economy, and to be able to capitalize on what we already have. So much wind power, so much solar energy. And if we come together, we believe that we'll be able to encourage other international investors to invest alongside ourselves, and therefore be able to drive successfully that 5% agenda for Africa. Thank you.
Thank you. Thank you very much, Ndabe. Now we're going to move to Cairo and over to Eamon for your reflections on how asset owner co-investments and the 5% agenda can leverage the African Green Infrastructure Investment Bank, and of course to share your views on the importance of the commitment of 100 billion per annum to developing countries for adaptation and mitigation finance. Your views on that would also be most welcome. Thank you.
Thank you. Good morning to all. I think the reflecting or building on what Ndabe said very rightfully, so the approach of co-investment and partnership is the right approach. From an infrastructure standpoint, as a fund, for instance, we are allocating 70% of our target pipeline towards infrastructure, and 90% of that is going to be in the green space. That is in itself is a message, and this is only talking about the equity side. So as we find and structure those products, and with the help of an organization, or if Africa Green Infrastructure Bank comes to existence right now, as in tomorrow, we will find a pipeline of projects that we can offer to Africa Green Infrastructure Investment Bank, and we come to de-risk those products. There are so many initiatives that we could talk about. However, what we see in the market, the different dynamics are emerging in terms of developers and partners that you can actually tap in Africa, and they need to find those products readily available. And this is where our governments are looking at areas where we can help. And in terms of a consultation, we want to make sure that our governments listen to what the market is saying. If you're going to open up a pathway for $100 billion to come into an investment space, you need to create those investable products. In our view, in our experience, we're seeing that in the investment in the green infrastructure or green projects, there are pathways on going into green hydrogen as a medium towards trying to create a value container for the green energy. And Africa has so much potential in launching green energy products, but we need to create the pathway for that abundance to transfer or to host the value into a downstream product. So green hydrogen is one of those products going down towards green ammonia, and now we're seeing shipping companies globally shifting their fleets towards that energy. We're seeing also like Airbus had announced recently, they're going to transform some of their carriers towards hydrogen. So green hydrogen is going to become a component of value. How can Africa capture or ride the wave on that global trend? This is one thing. So that's an investment thesis that we need to start banking on. The other investment thesis is sustainability of infrastructure assets. And sustainability of infrastructure assets is going to rely heavily on the green economy and on the green component. If you're going to build solar panels, solar farms, if you're going to build wind farms, this is how you can fill the power gap in Africa and actually create the abundance where you can export. So Africa needs to look at those products. In terms of structuring a product, and I think Africa Green Infrastructure Investment Bank is predominantly going to fill a gap in product structuring. And the gap of product structuring is not only going to a Minister of Finance and saying, we need to have that sovereign guarantee to be able to make that project bankable. No, there are other initiatives as well that we have seen very successful examples on a 100% private developer going to institutional investors, buying their own insurance, like mega insurance. So they've managed to de-risk their own project. And this is a live example. I'm not at liberty to disclose the name of that developer, but a developer of a solar farm in Egypt was able to buy insurance, was able to harness international institutional partnerships. They were able to rank post-development risk. They were able to rank rate their instrument above the sovereign rating of Egypt. So they are at investment grade, and they were able to price it very competitively. So this is a green infrastructure investment product hosted in Egypt, however, priced at an investment grade. Egypt is not an investment grade yet. So that is something that is what we call in old investment terms, this is an arbitrage opportunity for Africa Green Infrastructure Investment Bank to actually stomach and price that risk accordingly with the right partner that we understand they can deliver that de-risking post-development, and then you actually stand to make a significant carry on that investment going forward. All of those are live examples that we've seen that are replicable. And with that ambition, I think there is so much that Africa can offer, and capital is really looking for yield, and Africa can offer that yield. So the medium of creating the pipeline, structuring the pipeline, and the advocacy that we are actually pushing for, and what Alison had kindly alluded to, it's not only a law, it is a pre-packed set of contractual framework that can be rolled out. And this is what makes those products amenable to institutional investors. Institutional investors would like to see something they're familiar with, they've seen before, and you can spread that out. And this is where I fully support that initiative. Thank you.
Thank you very much, Eamon. I think the degree of innovation, and as Ndabi has mentioned, we are mandate makers, and of course our ability to innovate these products, on the risk mitigation side, the example that you just gave, you've just explained how essentially a developer has been able to pre-financial close attract insurance. So the ability to de-risk the project development phase with instruments like insurance and contractual obligation insurance are just one of the many things that will be baked into the institutional investor public partnership model amongst many other direct pathways that will be very beneficial to governments looking to, draw us in and get our expertise and help and partnership to develop very large programs of nationally determined contribution projects. We're now going to move to Gabon, and that's our dear friend and brother Akim to share his views in the same manner. The floor is yours, Akim.
Thank you very much, Sugar. First of all, I'd like to thank you for the opportunity to participate on this panel. And I have to say, I'm really pleased to see that green finance and climate change is really gathering momentum around us financiers. I'll try not to repeat what has already been said, because most of it has already been said. But just to build on what Eloy mentioned, when we look into co-investment, especially us as a sovereign wealth fund in Gabon, we don't dive into a project when we don't have a private sector involvement. Now, we realize that the need, the capital is there, and the gap also is on the continent. However, what we're missing are well-prepared project that can be understandable for investors, and we also need to have that clear regulation that is quite readable for investors. We're looking at infrastructure investments, so we're talking long-term. We're looking at generations. We have patient capital, but we need to ensure a certain level of stability and understanding of the environment. And I think that's really where sovereign wealth fund and other local institutional investors really have a role to play into making sure that foreign capital find their way to our economy and have the comfort that they have a local partner that also has some skin in the game and that the interests are aligned. When we take just our example in terms of how we were able to leverage foreign direct investment, we're currently developing a pipeline of 3 hydro dams and 1 water treatment station, plus a thermal plant. That's a total of $1.2 billion. 6-7 years ago, that amount would have been supported by the national budget. Today, we realize that our national budget is tight and our revenues are diminishing. And we also have some social requirements in terms of building the healthcare system and building schools. So the government money should be oriented toward those. We were able to secure those infrastructures by just investing 12% of the total amount, 12% of those $1.2 billion, because we're able to secure sponsors, co-investors to come with us to finance the 30% of the amount as sponsors. And then we were able to secure DFIs for the debt side. One of the projects closed in June. It was $177 million. And we had all the development financial institution, the FDB, IFC, and our partner on that project, for instance, is Meridian. So this is a success that we're trying to replicate. And the fact that the country has this sovereign wealth fund, it was really quite attractive and determinant in closing those transactions. And so those are really the example. And I really think that having that type of local partners in our countries in terms of having institutional investors, it's really a plus. Thank you.
Thanks very much, Kim. In the interest of time, we're now going to zoom to Nairobi, Ngatia. So, Ngatia, the floor is yours.
Thank you very much, Herbert, and good morning, everyone. Just to start off with, my name is Ngatia Kirongi, and I run the Kenya Pension Fund Investment Consortium. Short is KEPFIC, and we are a consortium of local pension schemes that have come together to jointly assess and co-invest in a new asset class in our market, which is infrastructure, let alone green infrastructure, but infrastructure in general. And KEPFIC was created really to address a number of challenges, and the challenges around the lack of participation of pension schemes in this asset class. Primarily the lack of awareness of the opportunities in the first place, the lack of institutional expertise to assess the opportunities even where we are aware of them, the large investment sizes required, as well as elements such as regulatory uncertainty. We have approximately 27 members right now, with about $5.5 billion total under management, of which about 10% of that can go directly into infrastructure, or at least directly into an asset category called infrastructure. But there is flexibility to do a lot more in other investment categories. So we can go, anywhere up to even 30% of the assets that we are holding in, collectively. So I'm very positive about what everyone else has said before me. I would like to speak about what, as KEPFIC and as an asset owner forum within Nairobi, what our expectations are for the Africa Green Investment Bank, or Green Infrastructure Investment Bank. Well, the first thing is the mobilization of capital. First of all, it's important to note that, like I mentioned, we are relatively new to this game. We're relatively new to investing into infrastructure in general. And so being able to walk hand in hand with a credible institution like the AFG-IIB would be very helpful to getting this, to actually achieving our mandate, which is to invest in at least $250 million in infrastructure in the next 2 to 3 years. So having a partner like the AFG-IIB to work with us, to help us in deal sourcing, in assessing the opportunities with us, to build our technical capacity, and to help us with technical assistance would be very, very helpful. And it is a big positive for us where we are standing. But on top of that, I think the most important factor here is just the bankability of transactions. Working with a credible institution that will help with the commercial viability of these green investments that come our way is really critical, because, as has been mentioned previously, we manage the people's money, and we are not a concessional or a charity of some sort, and so we are answerable to our members who are looking for the right risk return balance. And so I think the work of the Africa Green Infrastructure Investment Bank would be really helpful in getting us to that point. And so I'm very keen in exploring the risk mitigation instruments that have been discussed, the first loss pieces, which are really important for us as conservative investors. Hubert, you mentioned the upfront refinance commitments, which do a lot to reduce the, let's call it, exit risk for our members or in any investment. Those are big ticks for us. I don't think it can be understated how important it is to hold our hand and to recognize our conservative nature at least at this point. So, the important thing is also to recognize that we know that as a developing country, we are probably going to be the hardest hit from climate change, unfortunately so. And so the need for an institution like AFG-IIB to bring not just local capital together, but also capital from the region, from the continent, and globally is extremely powerful. And it's a very positive signal for us when we see regional and international players looking to co-invest with us in local opportunities. And that's a big box that's ticked in our mission to mobilize domestic capital. Thank you.
Thank you, Ngatia. You know you have a strong partner in the African Green Infrastructure Investment Bank, and we're very pleased to have Ketvik as one of our advisory board members to help us really ensure that each step that we move, we understand what the needs are on the ground, not from the aerial proverbial 360. So, thank you very much for those important remarks. Last but by no means least, we're going to zip to Accra to Solomon Asamoah to share his remarks and bookend this particular panel. Over to you, Solomon.
Thank you very much, Hubert, and good morning or afternoon, wherever you're hearing this, to all the listeners. And thank you very much for the invitation to participate in this very important initiative and this very important forum. For those who don't know, the Ghana Infrastructure Investment Fund is a government-owned investment vehicle set up by the government of Ghana to invest and develop infrastructure assets across Ghana. In a relatively short space of time over the last 4 years, we've managed to conclude a portfolio of about a dozen infrastructure investments in about 7 different sectors, covering power, transportation, ICT, mining, etc. And the key point is that for every $1 that we put into an investment, we've managed to raise $10 of other people's money to co-invest alongside us. So the importance of leveraging the private sector and bringing in other resources into our country and into our investments is at the core of what we do. And I think we've managed to do it quite well in the early stages. And I think that philosophy is what is needed across Africa, because as was said in the introduction, the infrastructure deficits are so huge that it's actually daunting. But if you can leverage other people's money to come into that sector, then it becomes manageable. So to do that, it's very important that you structure them appropriately and you structure them so it will meet the criteria of the international financiers. And this is why this initiative, I think, is particularly interesting and particularly powerful. I like to focus on the deployment of the capital, the projects, executing projects quite quickly. It's all good to talk around the issues, but unless we deploy that capital and show a track record relatively quickly, we're going to struggle like many other initiatives have done. So I think it's important that we focus on that. From my perspective, and a couple of these points have already been touched upon, but I think they're really worth emphasizing. The real value of an institution, a Pan-African Green Infrastructure Investment Bank, is to provide that leadership, that capital, that access to best practices to share with each of the countries, and particularly each of the national entities that are working very hard in the same space. So I think it's very important that they leverage the national institutions, and none better, I think, than the national sovereign wealth funds of those countries who know the lay of the land, who know the issues, and would very much welcome a strategic partner as they tackle these investments on the ground. So I think that's a very important component that we'll have to make sure it's front and center of the strategy of the Green Infrastructure Investment Bank. I also think that those local entities will also be able to provide a bankable list of projects, or potentially bankable list of projects, that the Green Investment Bank can access and can work closely with them to close them quite quickly and move forward. I think the Green Investment Bank can also provide a source of strategic advice, strategic best lessons, bring them to bear, understand what's happening in Kenya for the benefit of Ghana, for the benefit of Gabon, etc. And so we build that expertise across the continent. I'm sure all of my fellow practitioners on the ground go through the same feeling that I have, that it feels like we're reinventing the wheel every time we do a new investment. So it'd be very good to avoid that feeling and just build on each other's successes and failures. I also think, and the final point that I really want to make is that we all know that there's a large amount of international capital out there. We also know there's a large amount, more specifically, for climate-related financing. And that capital is finding it difficult to find a home in terms of projects on the ground. So that, and often that funding is concessional, and we can get to that marvelous phrase that everybody talks about, blended finance, which is needed to make many of our projects work. If the Green Infrastructure Investment Bank can really make it much easier to access those international pools of capital, that would be a great service. Anybody trying to do it individually, you know how complicated and difficult it can be. So having a big brother, so to speak, or a big partner who can facilitate that would be extremely useful on the ground in all of our countries, I'm sure. So with those few remarks, I just want to reiterate again that I'm very happy to be associated with this initiative. I think it's got a marvelous mandate, and we look forward to getting going as quickly as possible. Thank you very much, Hubert. That's my remarks.
Okay. Thank you very much, Solomon. You've really made that point about our ability to be that sort of ecosystem and that cornerstone. And for those who don't know, and when Solomon talks about the concessional finance market and multilateral development banks and regional development banks, he's in his humility, he forgot to mention that he was the former most senior executive at the African Development Bank, responsible for private sector development, infrastructure, and the capital markets. Very deep institutional investor experience, very deep multilateral development bank, regional bank, and development finance institutional experience, which is adding, a very rich component to our advisory board and our strategic development as we proceed. So thank you very much, Solomon, and panelists, for those important insights, which ably bring this first consultative panel to a close. Speakers for this panel, please turn your cameras off, and speakers for the second panel, if you'd be kind enough to turn your cameras on, because we're now moving to the second and final panel on international asset owners' perspectives on the road to COP27, and we'll be focusing on asset owner leadership and initiatives. Speakers in this panel include Duncan Bonfield, the CEO of the International Forum of Sovereign Wealth Funds, the Honourable Nick Sherry, who's the Vice Chairman of the World Pensions Council, Marcus Svedberg, who is the investment strategist at Fourth Swedish National Pension Fund, also known as AP4, Adam Matthews, who is the Chief Responsible Investment Officer for the Church of England Pensions Board. He's also the chair of the Transition Pathway Initiative. We also have Henry Blass, who is the Chief Content Officer for the G20 Infrastructure Hub, one of our partners for this particular event. And we'll also be hearing from Lionel Johnson, who is the president of the Pacific Pensions and Investment Institute. Also John Denton, who is the Global Secretary General for the International Chamber of Commerce and a board member of IFM Investors, the major infrastructure investor in Australia. And closing out with Stephanie Pfeiffer, who is the Chief Executive for the Institutional Investors Group on climate change. Similarly, in this panel, we will consult each of the speakers for their strategic COP-related insights, and each speaker will address the importance of asset owners advocating for and seeing the promised 100 billion per annum committed for developing countries, the importance of that overall agenda, which has become very, very topical at both business as well as political levels. Each colleague will also set out sort of 3 strategic priority areas or initiatives that institutional investors could provide leadership on in the run-up to and at COP27 to make COP27 an institutional investor-led and successful summit that, as we all know, will be hosted in the continent. So to get us going, again, we're just going to do a little bit of a international traversing, and we'll be starting in London with Duncan. So Duncan, really help us understand, over and above those other 2 points, what does the sovereign wealth fund community really want to see from COP26? And again, you understand that this whole issue of the promised 100 billion per annum developing countries, for adaptation and mitigation finance is not a political issue. It's a de-risking issue. Great to get your views on that. And then please just close out with sharing 3 strategic priority areas or initiatives that you think, the Sovereign Wealth Fund and the institutional investment community could provide leadership on in the run-up to and at COP27. Over to you, Duncan.
The success of Paris, I think, was in many ways, if we go back to that, was the clarity that it had in terms of its targets and its commitments. And in the years since Paris, what we've seen is all sections of society, starting with governments, respond to those Paris commitments. So we've had new public policies come into place, they've been initiated, and we've seen slowly, but rather accelerating over more recent years, the capital markets, investors responding to those public policy changes. And that leads us to today, where it was mentioned before, I think, by Solomon, that we actually have investors seeking green investments, and that there's more capital to deploy than there is investable projects. That's the current state of where we are. So the clear message, therefore, to COP26 from sovereign wealth funds is we'd like to see a real clarity of long-term commitments of that kind of scale that can start to unlock further investment markets where sovereign wealth funds can make those long-term commitments. So the clarity is all important. And that links actually very specifically to the 100 billion target. And you said it's about actually de-risking. You can have a clarity of commitment, but that also needs to have the political will to follow it up. And that's where if you don't honour those commitments, you're actually just inherently adding risk to a project, which will lead to additional pricing and a higher cost. So if governments make commitments, they have to be honoured. And that's part of the reason they're actually declaring for those commitments. And the other element of the 100 billion that's absolutely crucial here is, look at we've had this morning, actually on the call, we've had Akeen, we've had Solomon, we've had Ayman. They are all chief executives of sovereign wealth funds in Africa. So, and those sovereign wealth funds, they are very focused, as we've heard, on a domestic mandate, bringing in additional capital as well as deploying their own into investable projects, many of which are renewable energy focused. So that 100 billion will be made available to the governments in Africa and then to their sovereign wealth funds to allow more projects to become investable. So that 100 billion is actually, it has a very real end and a very material purpose. So again, I would emphasize that it's vitally important that comes in, because that will help unlock those projects that we've been talking about this morning. So, the message from sovereign wealth funds is that these things are all linked. If you actually want if you want to crowd in greater private capital, you need clear commitments, and those commitments need to be honoured. And then, as I say, I've already mentioned the fact that we're seeing from Morocco to Madagascar, we are seeing the development of sovereign wealth funds targeted on domestic mandates and domestic development, and they've been a really good way that governments across the continent have appreciated and have needed to understand what their limits are. And this is one of the key priorities, I would say. Governments need to recognise their limits and their limits of their expertise. And that's why, and one of those has been around investment markets and attracting capital. And so they've created these specialist organisations who've been allowed to attract and have attracted staff, have attracted people. The diaspora from many countries have come back and have staffed these organisations, have that expertise. So governments have recognised their limits, but they also need to go further, I would suggest, in terms of that. You mentioned, Hubert, about renewable energy. Well, let's look at the example of the mobile telecommunications as a good example. Primarily led by private capital across the continent, and started off in small scale, but has obviously been connected right across the continent, and has been hugely successful, both in terms of what it's delivered to consumers, but also as an investment project as well. And one of the messages that we get is where you can directly connect consumers with providers, and without the need for any kind of gatekeeper into that system, you will have a more efficient market. So that's one of the things that we would call upon governments to learn. You don't need gatekeepers. The market and consumers will drive efficiency. And another priority that I'd suggest is around mandate alignment. So sovereign wealth funds, both those that I've mentioned in Africa, but also those who can deploy large amounts of capital from outside of Africa, across the Gulf, across Asia. They are looking for a long-term return on their capital. And they're also looking for an element of liquidity in their investment as well. So ultimately, they have different stages at which they would want to exit. And so we would look at governments that they have to, and their sovereign wealth funds that are in Africa, that's the basis upon which they need to set up investable projects. They need to have that long-term return focus. And one of the things that we see actually is, and this I'd suggest is the third priority, is deploying capital at speed. Because we do see that a number of projects are set up on the basis and organised primarily with development finance institutions on their terms, which often tend to be slower than those at which private capital can be deployed. And also it's the reverse of the 80-20 rule. DFIs might provide 20% of the capital, but they have much more influence on the structure of those than needs be. If private capital is to be deployed at speed, it needs to have a greater say in influencing the broad areas of those projects so that capital can be deployed at speed. And I think the last point I'd make is just the fact that, and we talked, Ayman talked about pre-packed investments, I think, which is a great idea and approach, but pre-packed and also the ability to bundle across geographies as well, I would suggest, which will allow smaller scale projects to grow in scale. In effect, it's learning what we've seen in the tech industry. How do you make things scalable, pre-pack, bundle them across geographies, diversifies risk, and also increases the quantum overall, which will attract yet more capital into them. Let me leave it there.
Thank you very much, Duncan. Very clear messages, very well understood. We're going into, our next generation's view on life, which is permissionless, decentralized. As we plan for the next 50 to 100 years, we must be very careful not to hold that generation back with our views on life when their expectations of the environment, of the economy, are very different from the way that we were raised. Grey hair, of course. So thank you for those insights. And now let me move on again on our sort of global tour. So our next speaker joins us from the island of Tasmania, on the other side of the Pacific. The Right Honourable Nick Sherry is the former Minister of Superannuation and Corporate Law, and one of the fathers of the Australian pension miracle. Imagine a country where pension assets represent more than 180% of GDP, as opposed to only 20% or 30% for most nations. Nick is, of course, the co-founder and chairman of the Singapore Economic Forum, SEF, and the vice chair of the World Pensions Council. And he joins us today in the latter capacity. So, Nick, over to you in Devonport for your remarks. The floor is yours.
Thanks, and delighted to be here. Tasmania, Australia. Some are never sure where it is, but delighted to be here, and unfortunately only relatively briefly because of a pre-existing commitment. And delighted to have been a founding member of the certainly the Australian system, which is now about 3.3 trillion, 180% of GDP. And of course, the Australian system has long had extensive experience in respect to infrastructure. I'd say modestly we were one of the early leaders in the world in investment in infrastructure, and also ESG green issues related to investment by superannuation, as we call it, pension funds. And also delighted to be a founding member of the advisory board, our organisation of the African Green Infrastructure Investment Bank. It's fantastic that the African Union has recognised the centrality, the importance of the asset owners, particularly in the pension fund world. It's not the only important driver in respect to investment. Of course, sovereign wealth funds, insurance companies, other financial institutions with a massive pool of capital are very central to mobilising the shift that has started to occur and will continue to occur in respect to the owners of capital and infrastructure, and also all of the ESG issues associated with infrastructure. And as I mentioned, we do have a great deal of experience in the area, and I'm more than willing to connect one-on-one with anyone who's interested in understanding some of the detail and complexities of those issues. And of course, a carbon target or a net zero objective can't be met without the shift by the financial institutions. And it is important and it is urgent that governments, and as a former member of a government, as well as extensive superannuation pension experience, it is important the world over to modernise oversight regulation of financial institutions to allow investors to responsibly shift into this sector. And that's why we support the initiative of the CFA Institute and your friends and colleagues in Africa. It's been very interesting to listen to the range of speakers to date. So thank you for inviting me to make some brief remarks. Hubert, back to you.
Thank you, Nick. Really appreciate those remarks and you making the time to be with us today. And we look forward to our continued collaboration with the World Pensions Council and the Singapore Forum, and also particularly in relation to your deep experience being one of the key architects of the PPP and regulatory frameworks around infrastructure. We certainly would love to be able to continue to draw on that as we work with Alison and the DLA Piper team on the Institutional Investor Public Partnership Law Framework. And since you educated us again on the precise geography of Tasmania, I think we're going to stay in Australia, and we're going to go right now to the GI, the Global Infrastructure Hub, which was established by your good government under your leadership, from what I understand. So we're now going to turn to Henry Blass, who is the Chief Content Officer of the G20 Infrastructure Hub. And what I'd like you to address, Henry, is we talk about G20 as if we completely understand all of the organs, all of the relevance. Henry, please break it down for us. What are these various G20 related organs for infrastructure? How do they work, and how can they support the African Green Infrastructure Investment Bank agenda and the global green finance agenda? And sort of help us get some of your views on some of the other questions that the colleagues on the panel so far have answered. Sorry. Okay, over to you.
Thanks. Thank you, Herbert. It's great to be here to talk about such an important topic, and unfortunately I won't be able to explain the entire G20 architecture in 3 minutes, so I'll try to be quicker. So you're right, the Global Infrastructure Hub is an initiative of the G20. That's the dedicated infrastructure agency of the group. We're created in 2014 under the Australia presidency, and we really help the G20 focus on infrastructure that is sustainable, resilient, and inclusive. So obviously at the G20 level, creating an environment that supports more private infrastructure investment is a core concern, is really one of the key priorities. And so we have groups like the G20 Infrastructure Working Group, the B20 Finance and Infrastructure Working Group, and then this collaboration with entities such as Compact with Africa. They all have a key role to play, obviously, in fostering conditions that support private investment and also institutional investment in infrastructure. So their roles, generally, compared to MDBs and other national players, they're less around preparing projects. They instead focus more on addressing knowledge and data gaps, work on reforms that are relevant globally, and sharing best practices. So as an example, the GI Hub, this is how we called. We joined the CWA, the Compact with Africa, as a knowledge partner earlier this year. And as part of engagement, we'll focus on encouraging private finance, especially in regards to green and circular economy projects. So what's next for the G20? The incoming presidency is Indonesia in 2022. This year was Italy. So we are a key delivery partner for the presidency infrastructure agenda, which is still under development. But what we know already is that there will be a strong focus towards emerging economies and inclusivity in general. So again, I think there will be opportunities for us to focus on areas that are relevant to the discussion today. I think the first question you were asking was around the importance of the COP 100 billion per annum commitment. So I think maybe we take a very quick step back. When we look at the private sector involvement in infrastructure, especially in emerging markets, well, data shows that first, the great news is that ESG is really nowadays front and center. We've seen a radical increase among infrastructure players, well ahead of the average corporate, and that includes also emerging markets in Africa as well. So there's actually nowadays, it's not when it comes to investors, it's not a nice to have, it's a have to have. And so that's great news, obviously. Now, the less so great news, I guess, is that when we look at the total infrastructure investment, despite the great needs in the Africa region, when we look at the greenfield projects, the private investment actually has gone down a little bit over the past 10 years. Now, there's always a good side to that story, is that when we look at green projects in particular, whether it's those supported by green bonds or renewables, etc., those were actually more resilient, and they actually sort of partially increased over the past 10 years. So again, it kind of shows that investors are looking more and more, definitely sort of keener on greener projects. So that's great news. So now, when it comes to institutional investors, obviously they have limits on the level of risk they can take, and so the focus is less on greenfield. But I think that's also where having such a commitment will really give clarity to banks and those type of sponsor early investors. And the clarity that they will be able in the future to leverage that capital after the project has been de-risked. So it's really essential that there's that clear message that institutional investors will actually be looking at those markets going forward. So if I can just jump now to, I think, your last question, so providing three ideas, three key actions that could be supported by the group and related to the G20. I think the first one that I think we talked about is broader than Africa, obviously, is really to support the convergence of ESG criteria for infrastructure projects. I mean, it's hard enough for everyone to create bankable projects, but now countries, they also need to build capacity to actually develop green and circular projects in order to attract this capital. And there's nothing harder than preparing projects for multiple criteria and multiple sort of standards. So there's obviously a lot of initiatives. Fast and Price was one of them, as led from Europe. But I think it's important that institutional investors are also embracing that convergence. Otherwise, it is very difficult to create that market in that size. The second area is around regulation and data sharing initiative. They're essential for us at the G20 to be able to push for sustainable infrastructure being defined as an asset class with its own prudential treatments. It's not the case at the moment, and the future sort of Basel IV will actually make it difficult for banks to actually to continue to play their role instead of structuring greenfield. So it's very important that there's more data sharing, so that the fact that infrastructure is less risky is actually clear to regulators, so that we can push for their own sort of a specific prudential treatment for infrastructure and sustainable infrastructure in particular. And the last point, which I think is very relevant to what you're doing, is really around capacity building and supporting the ecosystem you're talking about. Well, it's not exactly the primary role of investors. There's a lot of initiatives around there that really sort of focus on that. And it's obviously absolutely critical in getting countries to create that pipeline of projects that will then be interesting to institutional investors. So again, as the GHub, we support the G20, and we're sort of keen to continue to support your initiative as well. Thank you.
Thank you very much, Henry. Really good points. I think now many of us are much more wiser about the G20 and its organs and its relevance to us as the institutional investment community. We're going to continue our tour. We're going to go to Sweden right now. I'm going to call on Marcus. Marcus and I have been speaking for quite some time about the whole issue around risk mitigation, and he's doing some fantastic work there. So I'm really going to call on Marcus just to share some of his observations about asset owner risk mitigation innovations and initiatives, and which of those could potentially be applied to Africa or the African Green Infrastructure Investment Bank. Again, asking for his views on this, promised 100 billion, and then hopefully he'll just round off with sharing sort of 3 strategic asset owner-led type priority issues and initiatives or insights to make COP26 a success. The floor is yours, Marcus.
Great, thanks, Hubert, and thanks for inviting me and for creating such a good group of peers. I've been spending the last hour and a half nodding, and I could be very short, saying I agree with everything. Thank you. But let me touch upon a few things, just underline what others have said that I particularly agree with and think is important. One is, so there's a pretty big gap between the estimated financing gap for the SDGs for Africa or for low income, middle income countries, and the available supply of investable products at institutional investment scale. And I sit in a couple of different groups. We're discussing this, and we keep coming back to the issue of pipeline. And someone earlier on this call said, we also need to think about co-creating pipeline. I think that is key. We need to think about aggregation techniques. I saw there was a question in the Q&A function about what about entrepreneurs and startups. So for us, it's very difficult to invest directly in a startup or an entrepreneur, but through aggregation techniques, we may get that kind of exposure. But aggregating things and thinking how we can create that pipeline, how we can make these things bankable, I think is absolute key to get to the scale, to get to the diversification that institutional investors need. Second, someone else said, the co-creation of solutions. I think that's also key. In the old world, someone raised a fund or a fund of funds and then traveled around the world and sold that fund. There's still a place for that, but increasingly, especially in infrastructure, we're talking about platforms. We're talking about asset owner-driven platforms. We go together with other peers, and again, I've heard a lot of institutions here today with various almost identical investment strategies that we have. Long-term, big focus on sustainability, and I assume we have very similar risk-return mandate. to go together and together with someone and such an institution as the Green Infrastructure Investment Bank that you're proposing, I think is great. Then we can create things. We're doing this in the Nordics together with other institutional funds here. We can very well do it in other geographies as well. I think this is an important way forward. Third, I think we have to be more innovative. When we have to, those two first point was about push ourselves. I think we also need to push some others. There's been quite a number of mentions of de-risking techniques, and there is a fairly big toolkit out there. First losses, guarantees, different tranches, and so on. I think these can be used, and these can be used at scale to find these innovative solutions. And in one of the prep talks, I told the others, I don't know how blunt I should be, but I think that there are quite a few public and semi-public institutions that could take on more risk. And to use a good example, I think the African Development Bank securitization room to run a couple of years ago was a great example. But they're very far apart. I think we need a lot more of that, and together I think we can also constructively push some of our domestic or international organizations also to be more constructive, take on more risk, and create these solutions so we can invest at scale. And I also think that within the scope of this roundtable, I think we have all the contacts. So it's not that we need to struggle to find the people that can create these deals. So I'm actually quite positive that we can actually make this happen sooner rather than later. Thanks.
Thank you, Marcus. You went straight to it. You've helped us understand some of these particular issues. I know that Henry is right there. He's, a number of these issues, and we're going to be able to take forward to some of the appropriate political forums, including some of the G20, platforms, because the G20 has expressed a strong interest in engaging institutional investors, particularly in developing parts of the world, Africa in particular. So I really appreciated those particular insights. And as we talk about Africa, we always sort of think about the just transition. And every time I talk about the just transition in global forums, I'm always reminded that there are parts of America that need just transition. There are many other parts of the world that also have this just transition issue. So I'm now going to go back to London and call on Adam to share his views. But in particular, Adam, we'd really like to get your views on what just transition investment outcomes would you like to see from COP26. And then, of course, just as everyone else has, you can weigh in on the 100 billion transition and adaptation finance question, and please close out with those three very specific priority areas. Adam does so much, ladies and gentlemen. I can't even begin to tell you. So we won't go into his profile now, but just know that this is a very strong ally for our work in Africa and providing great leadership amongst the institutional investment community. Over to you, Adam.
Well, thank you very much, Hubert. Thank you very much for inviting me to join the panel. I mean, look, the challenge is absolutely enormous. I think the opportunity is enormous, as people have been setting out today, and time is against us. So really, when it comes to the 100 billion, it's just a question of trust and commitment. And I think the message from investment community is very clear to governments to deliver and ensure that that is there and isn't a barrier to the kind of change that's needed. I mean, in terms of three practical things, and I do actually think the three messages I would say is practical from the way that we need to approach it from the investment community, particularly in Europe. We need to rapidly develop the practical tools to understand national transition plans of countries in Africa, really to be able to understand how nationally determined contributions are going to be delivered and the finance that's needed to unlock it, and how the work that you're championing, Hubert, will really enable that. One of the things we're doing is through the Transition Pathway Initiative to have a tool that really can do that through the Ascon project, which will have a way of looking at sovereign debt. And I think investors getting practical to understand those national plans and really linking that to their decision making and the way that we can play a proactive and supportive role of a national plan is going to be really important. The second one is to practically collaborate as asset owners outside of Africa to support the transition. We really need to roll up our sleeves. We need to get much more proactive. And I think picking up on Marcus's point that really there's much more effective ways for us to join forces outside of Africa to support the transition that you've all been discussing this morning. You've got Stephanie Pfeiffer from the Institutional Investors Group on Climate Change speaking at the end of this. That kind of institution can play a very effective, practical role, convening, looking at the kind of ways in which we can converge collective interest in supporting the transition. And I think there's a lot more we need to do there, but also in how we can repurpose organisations like the World Bank and regional development banks to assist in the mission that you've set out, Hubert. And I suppose the third one really is we need to ensure that we practically support not only the new green infrastructure, but acknowledge the need to support a just transition from existing fossil-based assets and how this can be transitioned at pace. Keen not to see difficult assets washed out of public markets, but genuinely supported and owned through the transition, particularly in countries like South Africa, where we really need to see close alignment to that understanding of the National Transition Plan, and at the same time, the need to have confidence as investors that we can own difficult assets that are currently provided energy that's essential, but that will ultimately need to be transitioned as the new energy and funding for the new solutions comes online. And so those two things need to be managed practically in tandem, and I think investors need to really be bold and committed enough to see that as part of the bigger picture and work together to ensure that communities and workers aren't equally left behind. So those are the three sort of suggestions. We're very committed to playing our part, working with other investors, and really support the mission of everybody that's been speaking on this call. So looking forward to further collaboration.
Thanks very much for those remarks and your tireless leadership on these issues, and we will certainly be ramping up the engagement as we in a matter of weeks transition from COP26 in Glasgow to COP27 in Africa. So I'm now going to rapidly move to Lionel Johnson, who is the president of the Pacific Pensions and Investment Institute, PPI.
Hello and greetings from San Francisco, California. I'm Lionel Johnson, president of the Pacific Pension and Investment Institute, or PPI. PPI is an international association of asset owners and asset managers with a combined $25 trillion under management, advisement, and administration. I am grateful to the African Green Infrastructure Investment Bank and its various partners and co-hosts for organizing this event, and I want to offer a special thank you to Hubert Danso for leading on this and on so much more. I am delighted to provide some thoughts on the vital efforts of so many in this room, including my distinguished co-panelists, to spur green investments in Africa and around the world. I am honored to serve as an advisory board member to the African Green Infrastructure Investment Bank, and I believe this institution can serve a vital and catalytic role in driving green infrastructure investments on the African continent by attracting both domestic and international capital. PPI's membership consists of large-scale institutional investors with horizons that are long-term. Many of our members are embracing climate-friendly investment principles and looking to pursue opportunities in next-generation projects such as green infrastructure, renewable energy solutions, leapfrogging technologies, and climate change mitigation technologies. For our membership, whose investment promises span generations, being on the right side of history is paramount. Climate change is the preeminent challenge of our generation, but it also presents a striking opportunity for patient capital. The role of private sector capital is essential if we are to build the type of future that we're discussing today. Platforms like the African Green Infrastructure Investment Bank have the unique ability to coalesce public and private monies around major initiatives. The bank offers a co-investment seal of approval, lowering risk levels and helping to ease and coax additional investments in this space. At PPI, our members have a wide variety of risk appetites, interests, and philosophies. What binds them all is the desire to find long-term, safe, and profitable investments. Green infrastructure is one such opportunity, and multilateral banks have an incredible potential to have a galvanizing effect on a constituency that is searching for these types of investments. The irrefutable facts and sobering conclusions from the latest Intergovernmental Panel on Climate Change report point to the urgency for drastic actions, or, as the chair of the panel has phrased it, extraordinary efforts under exceptional circumstances. I believe that COP26 in Glasgow can reflect the strength of multilateralism, and I'm eager to learn about the solutions that might emerge from the discussions this year. If we had not understood the lesson before, these past few years have proven beyond a doubt that international crises do not respect man-made borders, and only when we work together in pursuit of our shared fate can we adequately address them. Lastly, regarding those in the investment community who may be less forthcoming about green investments, those who are simply laser-focused on rates of return, I believe this is where true leadership by advanced asset owners could make an impact. By engaging rather than abandoning these investment professionals, by discussing how many of these well-constructed green investments can be profitable, by the peer exchange of environmental, social, and governance practices, and by uncovering opportunities in emerging and frontier markets. Adequately addressing climate change will require all of us to fundamentally rethink our current structures and investment strategies. We won't get there by preaching, but rather through the power of our example. I believe these can be priority areas for which asset owners who are forward-thinking can exert global leadership in the run-up to COP27. At our PPI programs, we view our role as facilitating the free flow of ideas, among them individuals with disparate views and ideas. In the coming year, it is my hope that all of us, in discussions both large and small, can continue promoting the idea that green investments are the way of the future. Forums such as this are an important part of this effort, and I'm grateful to be with you today, virtually, to share in these experiences and our perspectives. Thank you very much.
Thank you very much, Lionel. Now, John Denton.
Thanks, Hubert. It's great to be with you today. Let's start with the African Green Infrastructure Investment Bank. I think you highlight an important and I think often overlooked area for climate policy and climate finance in particular. Specifically, greening international supply chains. Now, we've seen a lot of focus in recent years within the United Nations climate process on mobilizing ambitious net zero commitments from brand name multinationals. There's a very strong logic for that. And the climate plans set out by many of the world's largest corporations are really very truly impressive. But what that focus misses is the vast proportion of global emissions, over 50% are in fact tied up in corporate supply chains. So in this context, there is growing recognition that existing commitments may be meaningless without a strategy to reduce the so-called Scope 3 emissions. We at ICC have developed several initiatives to help support an economy-wide approach to climate action, such as the ICC Chambers Climate Coalition, the ICC SME 360X, but we also need effective government policies to genuinely incentivize and enable MSMEs to invest in a net zero future. Mobilizing finance for this transition will be key. And when it comes to MSMEs, there is a clear lacuna in the Lord Stern doctrine on the economics of supply chains. Yes, there are significant mid to long-term returns on offer to companies from investing in net zero future. We get that. But that transition often requires significant upfront investment that many MSMEs simply cannot and are not in a position to make. Bridging this gap will be vital if we are to achieve the goals of the Paris Agreement. Last week, I launched a new ICC report on enhancing the contribution of the USD 700 billion export finance market to meet global stability goals. One of the key findings of their study was the need to establish joined-up financing approaches between development finance institutions, export credit agencies, national financing institutions, and other relevant stakeholders. To deploy CapEx at scale in these areas where it's actually needed, we need to have the most support from business in transitioning to a greener future. And I very much hope that the African Green Infrastructure Investment Bank will be able to play a catalytic role in such an ecosystem to help green supply networks across the continent. Well, to turn to advocacy, we clearly need businesses to get out and speak up before COP26, not just on the commitments they are making, but on the policies and frameworks they need to see from governments to enable rapid decarbonisation of the economy, and in a way that enables a genuinely just transition. The need for advanced economies to deliver on the USD 100 billion of climate finance for developing countries is certainly one of those issues. There are too many pending issues to be resolved this November in Glasgow for the negotiations to be derailed by broken promises from the world's largest economies. But we also need to hear the voice of the real economy on a range of other issues, such as the effective design of carbon pricing mechanisms based on real-world experience, and on the business case for agreeing workable rules to enable the trading of emissions under the Paris Agreement. Both these issues we'll be working on with our global business network ahead of COP26, setting out 3 priority areas the pension funds of the world's largest corporates could provide leadership on in the run-up to and at COP27 that will be hosted in Africa, on what corporate pension funds can do on the road to COP27. I'd say 3 things, by the way. First of all, look at how you can align your respective portfolios with a 1.5 degree target using readily available tools such as the Make My Money Matter campaign in the UK. Secondly, engage your employees on the kinds of investments they want to see their pensions used to make. And thirdly, don't be afraid to raise your voice on any of the challenges you are seeing to align your portfolios with a net zero objective, be it the fiduciary rules that run, fragmented ESG ratings, or other frictions. Business has got a right to speak up, and my view is we can only truly hope to deliver on the Paris Agreement if we start to have an honest discussion informed by the real economy on the barriers to its successful implementation. Thanks again to you, Hubert, and to my fellow panellists, and I do hope to see many of you in Glasgow this November as part of the discussion, or even as part of our virtual programming. And I certainly will see you all at COP27 in Africa.
Thank you very much, John. We're now going to go to Stephanie Pfeiffer, who is the Chief Executive of the Institutional Investors Group on Climate Change, to close us out. Over to you, Stephanie.
Many thanks for the opportunity to speak to you today. So IRGCC is the European Investor Network on Climate Change, and we have 340 members, asset owners and asset managers representing around $45 trillion. And they work with us to address climate risks and opportunities in their portfolios. And really, since the start of IRGCC, we've really seen a lot of interest from the investor community in the COP process and in its outcomes. But now it's fair to say that not since Paris has there been a COP where the stakes are so high and the scrutiny really so intense. So in terms of our expectations for this COP in Glasgow, there are a few issues at play. So firstly, it's of course a COP like no other because of the impact of COVID. All countries are seeing fiscal constraints and pressure on social welfare systems, and so it's really important that the outcomes of the COP recognise the need for a sustainable and climate-resilient economic recovery. The second issue relates to commitments from non-state actors, so that's companies and investors, for example. So we really need to see continued efforts from them to align with net zero across all sectors, across the finance system, and that's also going to be critical in supporting the outcomes of the COP. The third issue is really around countries' nationally determined contributions, or NDCs, and it's no secret that current NDC pledges do not add up to anywhere near the required 1.5 degrees temperature limit. So unlocking as much ambition as possible at that national level is also going to be critical. And finally, there are a number of important negotiating topics where progress needs to be made. and that includes credible plans for flows of public climate finance into the future. Now, in relation to that final point, institutional investors, of course, attach a lot of importance to seeing both adaptation and mitigation finance pledges being delivered. We know already that the goal of $100 billion per year by 2020 will not have been met. And so COP26 will be an opportunity for the donor community to restore confidence of emerging and developing markets by really setting out a clear plan for how to achieve their figure, possibly going beyond it, and then really undertaking discussions in good faith on what's to follow. And for investors, the delivery of those finance pledges is also a practical question. Everyone's familiar with the challenges of funneling private investment into emerging markets and developing countries. And so public finance needs to play a key role in helping to unlock that private finance through blended finance mechanisms and sort of wider collaboration between MDBs, the finance sector, and governments. So this climate challenge will really be won or lost in the developing world, and we really look to donor countries to deliver on their pledges at this COP. And then looking forward, it's really exciting to see that COP27 will be an African COP. There's a lot of experience and perspectives on climate change to be shared from the host. And of course, we know the need for much greater investment to help the region transition to net zero. Now, within the investment community, there's been a real shift over the last 18 months. There's a lot of focus on the net zero transition and a real focus in terms of integrating climate risk, but also looking at what is the role that investors can play to have that impact on the real economy. And so what we're seeing is that a growing number of asset owners and asset managers are making net zero commitments. And some key initiatives to mention there are the Net Zero Asset Managers Initiative, which covers half the world's AUM. There's Paris-aligned asset owners, which IRGCC co-founded, and the Asset Owner Alliance, to name just a few. So we really hope that we can bring some of the expertise and experience of these actors to COP27. And so while there are quite a few challenges still ahead, we really look forward to working with the COP presidency to support the delivery of a successful event, and one that really puts finance and institutional investors at the heart of climate action. So thank you, and hope to see you at COP26. Thanks.
Thank you very much, Stephanie, but not only Stephanie, thank all of you for your constructive interventions and bearing with us. The program has run on just a little bit, but by virtue of the fact that you're here, just again, another demonstration of your commitment to these big issues. Colleagues, that brings us to the end of this event. I'd like you to all sort of give ourselves a virtual round of applause and join me in thanking our speakers and our audience for their leadership, and our speakers in particular for their invaluable insights as we define and foster the role of asset owners in support of COP27. I'd like to finally and again thank the African Union Development Agency for hosting us, the Continental Business Network, the African Sovereign Wealth and Pension Fund Forum, the Global Infrastructure Hub, and the COP26 Presidency and the United Nations Framework on the Convention on Climate Change, UNFCCC, for making this event possible. Colleagues, this meeting is now formally closed. Thank you very much.
Doing business in Africa. You can't afford to be without Africa Investor.